Hi, I'm Ameya Hattengadi, Associate Portfolio Manager at Morningstar Investment Management. Welcome to the Morningstar Market Minute. It's a video series where we explore markets, the economy, and other notable trends every Friday lunchtime. Let's jump straight in. In the news this week, the big story was ANZ being hit with a $240 million fine from the corporate watchdog ASIC. The bank admitted to incorrectly reporting bond trading data to the government and to widespread misconduct affecting tens of thousands of customers. The headline size is manageable. ANZ's market value is around $98 billion. So the fine is roughly 0.25%. But the bigger story is the cost and the focus required to shore up non-financial risk management systems. Look, we still see the stock on a reasonable multiple with a robust dividend yield. Offshore, all eyes were on the Federal Reserve, with recession worries spreading amidst a cooling labour market and the less than stellar economic data. Overnight, we saw the Fed cut rates by 25 bips to 4 to 4.25%, as widely expected. Fed Chair Jerome Powell emphasised the balance of risks had shifted to the employment side of their mandate rather than being just on inflation. Equities took the announcement in stride. The S&P 500 is still hovering near record highs after notching fresh records earlier this week. Compared to the broader global market, it's interesting to me that despite making new highs after the AI buzz, US shares trailed non-US markets. International markets, emerging markets, and Australian shares have outperformed so far this year. US market prices look extended on a variety of valuation metrics, and when valuations are this steep, it's typically not very good for future returns, especially over longer timeframes. We're maintaining our cautious stance, but see select opportunities, especially in consumer-facing businesses, that have come under pressure recently. We see more attractive opportunities in emerging markets, particularly China, Brazil, and Korea. In fixed income markets, with cash rates coming down on growth cooling, high-quality bonds offer relatively attractive yields and will be a key shock absorber if the slowdown deepens. That's it for this week. Thank you for watching, and we'll see you next week for another Market Minute.
Any advice in this video is general advice prepared by Morningstar without reference to your objectives, financial situation, or needs. You should consider the advice in light of these matters and any relevant product disclosure statement before making any decision to invest.